Well, buckle up, folks. Big moves are happening, and it's no joke. The Federal Reserve just made a major call. Meanwhile, the President of the United States had some pointed words about China's role in ongoing trade talks, and to top it off, a statement from the Treasury Secretary sent shockwaves through the markets. We're diving into all of it right now. All I ask in return, flash me a big old smile and hit that like button. It helps spread those positive vibes. You've told me you enjoy when I cover the news first, then take a look at the charts. So that's exactly what we're doing today. Let's start with the breaking headline. Former President Trump claims that China should reconsider who initiated the latest request for a trade meeting. According to Trump, China reached out first, but China's narrative says otherwise. So now we're in a messy back and forth of he said, they said, and honestly, that kind of uncertainty doesn't help anyone. If both sides want stability, they've got to come together and sort it out. We need cooler heads at the table who can strike a clear, solid deal. That's the only way forward. Meanwhile, the S&P 500 didn't take the news well. It took a nosedive. And it wasn't just the stock market. Bitcoin, XRP, and the wider crypto world also took a hit. Why? Treasury Secretary Bessent stated that progress in the US-China trade talks hasn't gone far. That one comment sent ripples through the entire market. And I've got to be honest, when I saw that headline, I couldn't help but think, why say anything at all? If negotiations are still happening, maybe keep things behind closed doors until there's real news. Every time they speak out without a clear resolution, the markets panic. It's like lighting a match in a room full of gas. Sure, it was also a big day for the Fed, which adds to the volatility, but this whole situation is delicate, and the reaction proves it. Now here's something worth noting. In that same interview, Bessent did highlight something pretty major. He acknowledged that digital assets, yes, crypto, are playing a key role in financial innovation. He said they could actually boost the global use of the US dollar, especially with stablecoin regulation on the horizon. Let's hear his words directly. Digital assets are an important source of innovation that can drive the usage of the US dollar around the world, especially in connection with upcoming stablecoin legislation. There's growing buzz around the idea that digital assets could generate as much as $2 trillion in demand for US government securities over the next few years. That's a massive figure, and it reflects how crypto is becoming a serious player in the financial world. On top of that, digital assets are being recognized as a major force of innovation that could actually increase global usage of the US dollar. Now, we did hit a slight technical hiccup earlier, so if the message seemed to loop, yep, that's why. But back to the point, hearing the Treasury Secretary openly discussing crypto and digital finance shows how different today's market is compared to just a few months ago. We're in new territory now. Let's shift gears to the big news from the Federal Reserve. As I speak, the Fed chair is addressing the public, and markets are already reacting, pulling back slightly in real time. I haven't had a chance to watch the full conference yet because I was busy putting my little one to bed. My wife had a call, so I stepped in. I'll catch up on the full recap later tonight and bring you the key takeaways, so don't miss that follow-up video. As always, just a quick reminder, none of this is financial advice. Make sure to do your own research before making any investment moves. And hey, be smart out there. I'll never DM you on social media asking for money or for you to sign up for anything. Those are scammers, so please stay alert. Hey! Now, as many had predicted, the Federal Reserve announced that it's holding interest rates steady at 4.25%. If you remember, I mentioned earlier that according to investing.com, the odds pointed to this outcome, and once again that prediction lined up perfectly. So how did the markets react? Right after the announcement, we saw a small uptick. Things looked positive for a moment. Hey! Yes, 31. But as the Fed chair began speaking, the market started to pull back. Hey! Yep, XRP is currently sitting at $2.11, down about 2% for the day. There was a brief rally, then a quick drop, and I'll break down the reason behind that sell-off in more detail shortly. The Fed chair mentioned that the committee will keep shrinking its holdings in treasury bonds, agency debt, and mortgage-backed securities. This process is known as quantitative tightening, something we've been talking about a lot lately. In my view, there are two key things that need to happen before we can officially say that altcoin season has begun. First off, quantitative tightening needs to stop. We want to see quantitative easing instead. And by the way, someone once told me I wasn't saying the word quantitative quite right. Or maybe it was tightening, or maybe easing, who knows. Some words just trip me up sometimes. Anyway, back to the point. When that announcement came out, it triggered a market drop, and that's likely why we saw a sudden sell-off. Right now the market is on edge. Investors are waiting for signs like higher unemployment, the end of QT, or interest rate cuts. And there's also a close eye on Bitcoin dominance, which many believe needs to climb towards 70% to kick off the next altcoin boom. As of now, Bitcoin dominance is sitting at about 65.34%, so we're not too far off. Another important note, the Fed chair also warned that the risks of both rising unemployment and stubborn inflation have increased. Not surprising, right? Especially since last month's inflation data, remember the PCE numbers, came in a bit hotter than expected. So inflation is still a concern. Now in that kind of scenario, you'd think they'd want to start cutting interest rates, right? Well, today we saw China go ahead and do just that. But the US, still lagging behind. The next big rate decision from the Federal Reserve is coming up on June 18th, so we've got about 6 weeks to go. What's interesting is how quickly rate cut expectations have changed. Just a week ago there was a 61% chance the Fed would reduce rates at that meeting. Today, that number has dropped to just 24%. That's a major shift in a short time, and it shows how uncertain things still are. Now let's look at the technical side. If the past is any guide, the real altcoin season could begin when Bitcoin dominance hits resistance around 71%. Right now we're just 6% away. If quantitative tightening keeps going, altcoin to Bitcoin pairs will likely continue trending lower. Bitcoin dominance looks like it might climb to around 66% soon. At the same time, altcoin-Bitcoin ratios are dropping, currently around 0.34, with a likely target near 0.25, so we'll be watching that closely. To sum it all up, for altcoins to really take off, we're looking for a perfect storm. The Fed shifting to rate cuts, Bitcoin dominance hitting the 70% range, and quantitative easing returning. All of this, of course, should ideally follow the broader money supply trend, because M2 is rising fast, and markets tend to follow it. When you put all the pieces together, it feels like we're setting the stage for a perfect storm that could really push the crypto market toward its full potential. What does that mean for you? Higher prices when measured in US dollars, that's the goal, right? Take XRP for example. What you really care about is how XRP compares to stablecoins like USDT, Tether or USDC, not necessarily how it stacks up against Bitcoin. That's totally understandable. After all, you live in a dollar-based economy, not in Bitcoin. But here's the twist. Those XRP to Bitcoin ratios could actually matter more than most people think. This is why Bitcoin dominance is something we watch so closely. Historically, the flow of money in crypto follows a pattern. It